At GVFL, we are closely associated with most of the mentoring institutions. There are a couple of very good B schools which have their own incubation centers. I think more or less these are our feeder places.
So to add to that, right, so we are actually at a disadvantage, unlike other funds, DFJ or Kenan or any of the Sequoias and Helions, right? OGIS is not very well known.
Right.
So what we do in addition to trying to tap into all of those networks is what venture capitalists used to do in the US back in the 70s and 80s, right? Get out on the road.
Okay.
As an example, right, today was Proto. Yesterday I was just parked myself with the Maratha Chamber of Commerce. Sent out messages through Open Coffee Club, through TIE, through Pune Tech, etc. Right, inviting entrepreneurs. Here, I'm just going to park myself here for the entire day. Come and meet.
Okay.
Unlike in Valley or Boston, where you have bunch of deals, coming and pitching while you sit in your offices.
Right.
In India, you have to be in the trenches. We're only talking about maybe some internet, mobile, media, entertainment, software deals. But then if you talk about the next 800 million kind of an opportunity, healthcare, water, education, rural, you have to be out there. And lots of times, those aren't, your classical IIT graduates or IIM graduates or Stanford and Harvards. You have to go find these people. And, you have to bet. So I think so for angels to be really successful, I mean, if I were an entrepreneur, which I was one, I'd only believe in an angel who has got the domain expertise. And because that's when that money becomes very valuable to me. It's just not money. When I have no other choice, I'll still take that money, which is fine, because I have to run my enterprise or startup. But otherwise, if they know the mobile ecosystem, I want to go get money because they're going to help me, customers, partners, and later on follow-on investments. So I think whether angel or Series A, Series B in India context, you have to be out there in the trenches.
Okay.
Yeah. So I just wanted to make a point on the angel investment comment that you made, right? I think the lack of that layer of investing in people is not a deal sourcing problem, right? We track how many deals which deals get done in the market, which deals did we see. Our visibility is more than 60% of deals that are getting done. Of what is not getting done, I don't know. Right? I think the issue is deal creation. Right. I know 5 people in my network who, if they start a business tomorrow, I'll put angel money behind them. I can't put institutional money behind them, but I'll put my money behind them. They know that. I think that is the process which leads to people coming out and starting businesses.
Right.
So I don't think this is, creating that base of angel investors is about deal sourcing.
Okay.
I think that is how experienced people are going to come out of companies, feel comfortable that I've got some support out there, and start businesses. I think that's the real effect of angel investing.
Okay. But in the absence of an angel investing and investor base right now, that support has to come from the existing VCs, right? So, in a sense, does venture capital in India have to operate differently than it does in the Valley? So you do your growth investments, you do your later stage investments, and that allows you to continue doing your seed and early stages. Is that a model that works for now?
I think there is always a portfolio that anybody will maintain. So also, I have a basic question as to what is seed investment. So is it the first money or is it a quantum of money that we are talking about?
That's what a lot of startups also have.
Half of our investments are pure startups, business plan. But then the money amount was much higher. And a lot of time angel investment is equated with size of them around also. Right. So again, at least from our experience, there is enough seed investments we have done. And then you have to have a portfolio where you say, we have done some seed investments, so we should do some later stage investment also, because the exit horizons are different. So I think, I don't know, like about others, but at least we internally maintain that kind of a portfolio where there's a mix out there.
The venture capitalists in India, I think, a funny thing, how is it different from elsewhere in the world? You're stage agnostic, you're sector agnostic, you're a guru in every sector, right? And you operate in a market where nobody has seen exits, right? So it's all interesting. So
and by the way, you started investing only 2 years back.
Sure, absolutely. No, I'm talking about even last 10 years, right? You go to China, they'll put up this whole list. We're talking about Baidu, NetEase, Sohu, Alibaba, bunch of them. And you come to India, I haven't seen anything other than Dakshan, Spectramind majority of the times, in those. Things that get showcased. So
I think the one challenge we are not talking about is India is a small market, very small market, and we are all trying to apply US VC models to India. We all talk similar size Series A and B round as a US market in a 10x to a 100x smaller market sometimes, right? So the number of opportunities that are even somewhat comparable to, and venture as an asset class is established globally. Like Satish said, we have China colleagues, we have US colleagues sitting in, 10 to 100 times larger markets, also doing a $2 million Series A. So it just reduces what we can do pretty significantly. And I actually think that's why the angel business becomes even more interesting, because that's the only stage actually at which it is somewhat more, risk reward is in balance, because the reward is much greater and you can risk 20 lakhs or 50 lakhs. I actually think Series A is even a tougher market than angel investing some level. It's organized, all right. It's actually a very tough market.
So I wanted to follow on and ask. Actually, it's a controversial question, right? You hear entrepreneurs saying VCs are not funding, but I'm sure most of us are sitting on money.
Right.
So going back to the point that you made, is the question is, VC as an asset class looks for certain types of companies.
Right.
So are some of the entrepreneurs might be very legitimate and saying, VCs have not funded, my model fits in. But really, of the number of entrepreneurs who have not been funded, right? You could ask the question: are these VC fundable?
That comes back to that. Are they VC?
So I don't know if there's a mismatch.
Yeah.
What I'm asking fundamentally is there a mismatch between money and opportunities? I'm not sure.
It's all about ignorance in a way, or maybe it's hype. Because if you have built a company to a certain extent, the next thing is VC money. VCs are the way to go. It's like nirvana. You got there, life is made.
Okay.
But not very different from the way US market operates, though.
but to an extent,
the problem actually starts there, right? When you get VC money, that's when the problem starts.
Exactly.
It's not the end of the road; it's the beginning of the road. That's our problem, because we are starting out there.
So one thing people don't realize is, first of all, not all companies require investments.
Right.
Correct.
Yeah.
Or not all companies require venture investments, because there is a certain, and also when they come to VCs, that they understand that these are the kinds of companies that they have invested in earlier. This is what they feel comfortable with. This is what their competencies are, and therefore these are the right people to go to.
Yeah.
But none of that is already built in. It's like, I need money, they have money, that's why I go to them.
No, that's not the only reason. When Rajesh gets on the stage, he makes VC so sexy.
But actually, this is a very good point. Actually, some of the best companies are those that don't need our money, right? We would all love to find more of those companies that actually don't need too much of our money. That's the reality, because it's chicken and egg.
Yeah.
Lots of entrepreneurs are not pushing themselves to say how can I make my model more capital efficient.
So this complaint, right? I mean, entrepreneurs saying, I'm not getting funded, or people are not acting. I mean, the way I really look at it, during good times in every sector, there are 3, 4, 5 companies that get funded: online travel, SaaS, whatever, right? Everybody gets funded. And unfortunately, what ends up happening, a lot of them, kind of shut down over a period of time, because the marketplace is not big enough. And, maybe 1 or 2 of them get, an M&A opportunity, and one may go IPO. But from an entrepreneur viewpoint, I think during tough times, only 1 or 2 companies in a particular sector get funded. That's good for entrepreneurs, because there's a good chance of those companies making it to the finish line, fundamentally. And the way I really look at it is, somebody saved me, because it's just not getting money into my company. That's an opportunity cost from an entrepreneur point of view. From a VC point of view, it's very well known that I've made 10 investments. Even if 3 of them do well, I'm good, right? 7 others, I feel bad, but that's okay. That's part of the game. But for an entrepreneur, there's one-on-one.